All right, we are back for another Friday financial wrap-up with Mr. Michael Zuber. How are you, Michael?
I so look forward to these. For me, it's the culmination of a great week. It's the final thing, and then I go take a couple of days off. So I just love these conversations.
I do too. This is for October the 25th. Can't believe 2024. Can't believe Halloween's just a few days away, the end of the year. We get into November. But before we do, let's talk about Fed Speak. What's going on with Fed Speak?
Yeah, we got a lot of Fed speeches this week. I think I counted 12. We are definitely starting to see Fed presidents have different stances on where we are. We've got some folks talking about a terminal rate of about 4. We have some still saying 3. We have some, hinting at the idea of no cuts. We have others saying we need to supersize it. This next Fed meeting is going to be a live debate about what's going on. The market is still calling for a 25 to close out the year. The market has priced in a 100 basis points less cuts in totality, which is really why you've seen a repricing in mortgage rates in the last couple of weeks. The Fed, nobody has said this, but I can't imagine the Fed is happy that they cut rates 50 basis points and, mortgage rates went from 6.1 to 7.
Yeah.
That's tight. And again, we have folks like Mary Daly, talking about we're already too tight. We need to cut more. And oh, by the way, the real estate world has just gotten remarkably more tight with almost 100 basis point move. And it does seemingly get worse every day. So yeah, it's wild. The Fed might surprise us and give us a jumbo cut in a couple of weeks. So it's pretty wild.
Very, very interesting. Such wild times. Let's talk about 7% mortgage rates. What did you see this week? I've got a few ideas and things to share too. What was your take on it this week?
Well, 7% mortgage rates in an environment that I've already called a buyer's market. So let's just rewind the clock. Probably 6 weeks ago, I was telling everybody that we're going to enter a buyer's market. The end of the year is seasonally slow. That's not unique, but we did have this election, which I just thought was going to cause everybody to pull back on everything. So it was going to be remarkably slow. That was when rates were in the low 6s. Now you add on top of that 100 basis points of increase, you just have buyer demand disappear. You have the refi boom that is over. And it is getting pretty tight out there. In fact, just a minute ago, I was copied on a couple of Twitter posts. A gentleman named Ari says, 12 years of doing this. The market has never been slower than it is right now. Followed up by Ryan. Ryan says, at one rental at a time, myself, has been harping on this. We're getting no showings on any of my listings. So it is going to get slow at 7% mortgage rates.
Yeah, pretty wild. I want to say this is so wild in that I started watching a little bit of CNBC, the financial news channel, and it's interesting. So there's a gentleman, Rick Santelli, who deals with the bond market. And one of the things he's talking about is that why is this happening? It's because basically there's a lot of concern about deficit spending. What is that going to look like going forward? And that, again, the 10-year treasury continues to bounce at 4%. That seems to be the threshold.
Well, now it's at 4.2.
Right.
Yeah, it's at 4.2 now. It's crazy. So you're absolutely right. I saw Rick Santelli's interview discussion on this. He's absolutely right. The 10-year treasury is still, quote unquote, the best, but it's not a great asset, right? If that makes any sense, right? Again, our debt picture, our election, either candidate looks like they're going to go spend trillions of dollars that we don't have, and eventually the bond vigilantes will pick it up, and they may force rates higher. So I am really seriously, Ty, I'm really thinking about 7% mortgage rates all of next year and how that might both destroy the housing market and create some opportunities. So it's pretty wild.
Very wild. Let's keep it going. Refi boom, or should I say refi crash? What happened this week?
It's over. The refi boom is over. At 7% mortgage rates, we've lost about 1.5 million people that could have benefited. We also have just fear back in the market. I've been talking to mortgage brokers all week, and they're like, it's over.
Yeah.
Right. Where their phones were blowing up 3 weeks ago, where they were having, 30, 15-minute phone calls a day. It's now cricket. So any refi boom, any goodness happening in the refi. And again, you got to remember, a refi, that helps other people, right? Appraisers, notaries, all these things, gone. Refi boom's dead, buried, over.
Very, very wild. Side note, I was watching a lot of the NLCS baseball, right? We have the World Series starting on Friday. It was sponsored by Loan Depot. And I only have to say this because my guess is that they paid for that last year.
Yeah.
Or they paid with it with, fundraising off of, stocks or something, right? Like there's no way that like Loan Depot is sponsoring a sporting event. Like,
yeah, no, and if, there's no way. You're absolutely right.
Okay.
I'll just leave that one alone.
Okay. Existing home sales. What happened this week?
Well, again, we nailed it. I told people this was coming. I told you months ago this was coming, and I called the months. And let me be clear right now. The next month is going to be worse. The next report will be worse. How bad was this one? We did 3.84 million annualized sales. Think about this. That's 2010 level. I don't know if you guys know this, but we probably have 10 or 15 million more people. So if you were to do a comparison, normalize the data, this is record low transactions. And again, at 7% mortgage rates, October is going to be worse, right? Yeah. We won't get that data for 4 weeks, but it's going to be worse. It's bad. Existing home sales, bad. Turnover is again, and it's, people don't understand this, but I've been trying to educate you for 2 years. If you take a listing of 100 properties and you just list them out from lowest to highest, you pick the middle. That's median. The world that we have today is not 100. It is 60. But what we lost was most of the low end because there's no turnover. The move-up buyer is dead. So the transactions we are seeing are disproportionately higher, like I told you was coming. And that is dragging the median home price higher.
Got it. So again, if you're just reading some of the talking points you see in news headlines, there's no market crash in that, but yet we are seeing people. I got a call. I get 2 or 3 calls like this a week where somebody says, hey, I've been on the market 90 days. I've dropped my price, 30 grand, 3 different times, $90,000 in totality over 90 days. And why isn't my house selling? These are somebody else's clients, right? But people are scratching their head going, what the hell's going on in this market? Really, really wild. What happened with new home sales?
Well, again, this is all predictable and stuff we've called. In an environment of 7% mortgage rates, do you know who's not playing with 7% mortgage rates? Home builders. Yeah. I am living in a home today that was bought when mortgage rates were 8%. My builder had to buy me down to 4.99 30-year fixed for me to say yes. Builders have the margin, the balance sheet, and the ability to play at 5 or 6% mortgages. If existing home sales suck at 7% mortgage rates, new home sales are great because they simply don't play at 7%. So new home sales, as reported this week, were up and up meaningfully. That will continue. Home builders will continue to win because the spread between an existing home sale and new home on price is as narrow as it's ever been. Yep. But when you factor in one could buy down the rate, it's a no-brainer. New home sales are going to do quite well.
Yeah, what a benefit that they have, like you said, balance sheet and the ability to basically create their own bank, basically. So exactly. Absolutely love it. So let's keep going. Let's talk about weekly unemployment. What happened this week?
Yeah, this is wild. Again, this is something I told people to watch. I think it was 3 weeks ago, we had a jump in the unemployment claims to over 257 or something like that. It was such a big jump. And it was only a single number. We talked about it going, guys, pay attention, pay attention, pay attention. And all we've seen since then, 257, 244, 233. And I think today was like 227. So we are back below 230 and we're just cruising at this number. 230 a week, not concerning. However, I've also started to tell people that I think this is going to turn into 1981 and 82, where if you get unemployed, your tenure is going to be longer. So the same report every Thursday, you get the weekly unemployment claims. You also get weekly continuous claims. This is a number we've never talked about. But if I'm right about what is going to transpire in 2025, that is the number you should start watching as well. Good news, same report, couple of lines lower in the report. It's reported every week. What did we see in continuing claims? Even though weekly unemployment claims are down 3 weeks in a row, continuing claims are up. So what that means is duration of unemployment is growing, which is what I thought would be coming, and we're starting to see.
Yeah, very interesting. Even I was talking to a guy, a business owner. He has a trucking company, very specialized. He deals with furniture, delivery of furniture.
Mm-hmm.
And he's scratching his head going, what the heck's going on in the economy? And my words of encouragement is hopefully it's just a slowdown with the election.
Yeah.
But maybe it is, in fact, even something.
Well, he's not alone. Whirlpool, right? Big old manufacturer of refrigerators and washing machines and all of that. CEO said on their earnings call, consumers are clearly pulling back until after the election. So he's not alone. Lots of people are saying it.
Very interesting. Well, let's talk about who wins and who loses with 7% mortgages.
Well, unfortunately, I only could think of two winners, so we'll do the winners first, and there's a whole bunch of losers. The first winner is going to be new home builders. If new home builders orient themselves to entry-level housing, they're going to crush it. They just are. The second winner, I don't know, unfortunately or good, depending if you want to look at the silver lining, are one rental at a time investors. Anybody who's doing the work, anybody who is seeking motivated sellers, anybody who's writing disrespectful offers and following up, if you think it's easy to find a motivated seller today, just wait till the spring selling season. If we're operating in a 7% world in the easy season and we still have no buyers, watch out. You're going to get a lot of people. And Omar this week, right? Omar Alfaro said he's getting more phone calls now than he's gotten in 5 years from desperate sellers. So again, the winners are two: new home builders and investors who do the work and seek motivated sellers. Because it almost might be the best time, assuming we have 7% rates all of next year. It could get relatively easy.
Sidebar, something that's not in our notes. So if the Fed comes back next month, aka a couple of weeks from now, and they reduce, they go another 50 basis points, is that possible? Is that enough to soften 30-year mortgage rates, or probably not?
So again, my call always was 50 in November. I'll stick to it just to stick to it. So yeah, I do think it's possible. We get an unemployment number next week that I think will go up. It may give them all the excuses they want to cut 50. They also might be thinking cut 50 because the market simply has gotten tighter, which is not what they want.
Sure.
So I do think the base case is 25. Okay. Maybe a 50 odds is like 10%, 15%. So not crazy, but certainly possible. But as we have just seen, the Fed moves another 50. Shoot, the Fed goes 100.
Yep.
That does not guarantee mortgage rates go lower. I think if the Fed goes 100, mortgage rates go lower because the market is a forward-leading indicator, and the market would be surprised by 100.
Yeah.
I think it's possible that the market is surprised by 50 and maybe there's some give back. But no, it doesn't. It's not guaranteed. Like Rick Santelli said, by then we'll have an election. And if the market thinks the next president is going to spend another $2 trillion we don't have, that's a problem.
The other thing too that you've said and we've talked about on this show, and not heavy, but it's been laced in here over the last 6-9 months. Potentially, one of the things I've heard Santelli talk about also in the bond market is also concern that we may be going into another inflationary cycle. So that was also a part of demand for yield, and that what they called the real yield, not what the the 10-year
Yeah.
treasury at 4.2, but
right.
actually a real yield when you subtract out inflation. So very interesting times for sure. Let's talk about lots of opportunity for one rental at a time community. Let's talk about the two, probably the best opportunities in today's real estate market. Tell them about the school community.
Yeah, the school community, dude, it's 67 cents a day. You get to be around 300 plus. We did cross 300 folks. We're 302 people now. We're starting to branch out, right? We're going to have midterm renting and long out-of-state investing. We're going to start creating smaller and smaller groups so you get more and more value. We're doing weekly live calls, Q&A. I just did this one this week. We're encouraging collaboration because I took the 6-hour masterclass that you created. I made it accessible at level 2. I took my 10-week boot camp, made it accessible at level 3. So just in the last week or so, we've gone to over 300. We're now the number 4 ranked real estate investing school on the platform. My goal is to be number 1. We could get to number 2 within a couple of weeks. Number 1 is way out there. I want to congratulate her for doing that. She's way up there. But yeah, the school community is the spot to be if you are serious, if you want to take advantage of what's coming, if you want to be around 300 other people doing the work for 67 cents a day, plus all the benefits, other benefits that just go on top. There is no better place. You can go to school.com, search one rental at a time. It's frankly always been a no-brainer, but in the world that's coming, it's probably a requirement. You probably have to join just to stay level set and always in tune what's going on. It's a must.
Yeah, I mean, absolutely. It's a must. You're able to feed your psychology. You're able to learn, grow, build skill sets. Also, too, and I want to note, this is not like, if you're not familiar with school, for anybody out there listening or watching, it's not like the noisy, crowded, overstimulated Facebook groups where it's so noisy and it's disruptive. Respectfully, I can't spend a lot of time in the Facebook groups. If I'm in school, I actually love to go through, read the threads, and I love something you do that I have not seen other leaders in school do, which is you always shout out all the new people who joined this week, which means other people can acknowledge, hey, welcome, welcome, and then it basically rolls out the red carpet to them in the community. I love what you're doing there, Michael. Anything else on school before we move on to Vegas?
No, I think school is a must. Really, again, right, there's only a couple of winners in the next environment. If I'm right, about 7%, and it's going to be people like us doing the work, following up, writing offers. It's never easy, but man, if you can find a motivated seller and negotiate win-win, like the creative financing you have at level 2, because it's not all about price, folks. It's not always about price. Sometimes it's terms.
Yep.
And you've rolled out the masterclass on that 6 hours. You do a live Q&A once every 6 weeks or so. So we're so lucky to have you.
Yeah, I'm looking forward to the next one. Let's talk about Las Vegas. So I'm excited. President's Day weekend. Tell them where they can get information, tickets. VIP is almost sold out. What's going on there?
Yeah, just go to eventbrite.com. You can search one rental at a time. We've built the agenda. You can check it. It's on Eventbrite. We go 12 hours day 1, 9 hours day 2. You get 6 hours of networking. I feed everybody. We're doing podcast rooms. My events are different because nobody sells anything. There won't be anything sold. You're going to get, every speaker will give 20 minutes of live Q&A from the audience. My speakers don't fly in, fly out. They will be there all 2 days. You will be around 400 other amazing people. The audience makes the event. We've got surprises left, right, and center. We've got awards going out. It's going to be the party to be. And again, VIP is over 50% sold out. So if you want to be in the room for 6 hours with speakers, you better get to buying your tickets. And lastly, guys, if you don't know Vegas, hotels and travel get more expensive the closer you get. So buy your tickets now, and there's a very good chance that you could essentially get the tickets for free because you have secured travel and hotels at a cheaper price. Don't miss out. We're almost 100 days out. The 100-day countdown has almost started.
I love it. Folks, I say definitely get yourself to Vegas. You want to be in that room. Michael, thank you for all that you do.
Thank you, buddy.